Traders, welcome to the TMT Stock Market Strategy video for Thursday, November 10th. Crazy moves. We were expecting that, but nothing like this. Dow Jones down 800 points at one time from the lows to close up 200 points. It's a 1,000-point swing. Absolutely insane. Same thing with the other indices, guys. I gotta tell you, I mean, going on 30 years, there's a few things that I haven't seen in the last few years, and one being the Brexit vote, where you dump and you come back to make new highs. Today, yesterday's vote, and then we dump, we come back, and now we're up 15 handles in the ES in the pre-market Globex session. 4 months of straight consolidation. Haven't even seen that. I don't remember it, but 1995 was the last one. The flash crash where the Dow was down 1,000 points in about a matter of minutes. You could see this market is officially broken. I mean, and then you have the pollsters that have it so wrong. And I was, for those of you who follow me, you remember I said I wouldn't count him out, and because they only interview the Democrats. They don't really interview the Republicans and actually I should say the Republican voters. It's just crazy. So now the futures are up again today. We have a 3-day move, and we're extremely overbought already. It's just out of control when you see some of these moves, and it shouldn't be that way for the investor. It should be a calm move, continue to grind higher or lower for that matter, but it's just absolutely insane. I did say volatility's back. That's going to create some huge opportunity between now and the end of the year. Look, I'm still digesting this move, and I'm wondering, is this market going to go high? I mean, we had a 1,000-point move yesterday, and I think part of it was the hedging unwinding, okay, and shorts covering, okay, from that dramatic low. So I do believe that's pretty big. We are up, yes, we are up about 15 handles in the ES. There was some big surge in volume, but again, partly due to short covering and hedging that were on that larger institutions were unwinding. So you have to see where we go in the next couple of days. I really can't read into saying, we're going to new highs, but there's a few areas that I'm thinking about since we're that close to filling some of the gaps in the S&P. We're going to get right to it. Let's talk about the VIX here, down 23% in one day. Absolutely insane. I mean, this is just crazy move, guys. And remember, we have the short interest is at as extreme that it's ever been since this instrument has been created. So you still have to be careful here. I personally would not be shortening the VIX at all. If anything, I'd be looking to buy as a hedge, because I do believe there's some big turmoil. We might not get it between now and December, but come January again, remember last January, 8 straight days down about 8%. You got to be careful here, guys. Bonds are telling the whole story. They're getting decimated. I'm going to show that to you in a moment. Here's the UUP, the dollar ETF. Beautiful bull flag. We talked about this. We broke out. Next area is we're going to challenge these pivot highs here, and then we're going to shoot right up. After we break that, we consolidate. Here are your two upside targets in the UUP. All right. Next is going to be crude oil. Crude oil popped up again on a risk-on type environment. We're still really not. I personally wouldn't buy crude here at all. We are getting so close to the OPEC meeting on November 30th. If anything, I take a couple of day trade shots, but other than that, I would not be building any type of position until after that OPEC, that risk meeting is off. Let's take a look at the Treasuries. Here's U.S. 10-year, and it's funny. You get a few emails stating that. When I put this out back in late August, and I said, watch, we have an ascending triangle. Here's the measure move, 185, and I get a bunch of emails. Oh, you're crazy. And listen, I only follow what the markets tell me, and that's what I want to give to you guys. Okay, so this is the measured move, target hit. Now we're at over 2 and change. Now the banks do well, right? Interest-sensitive stocks do well, but you have to realize when rates are rising and bonds are starting to crash. All right, take a look at this. This is not a good sign, guys. All right, when you see bonds liquidate, and now, bonds, money's going into stocks, you have to be careful, because this is not a good sign. We've had this happen before in the last crash where bonds started selling off pretty hard, and sure enough, stocks followed. So this might not happen right now. This might happen a month from now, 2-3 months from now. But we are extremely oversold. We have major distributions 2 days in a row. And we're coming to an area where, if anything, believe it or not, I like the TLT for a quick long trade. For when you get outside the band this far, and you have the 8 way up here, you have to realize that we're extremely stretched. If anything, I'm looking for a bounce trade, a retracement rally back up to here in the TLT. All right, at least when we get back above the 200 in here, and we get that 50 and 200 meet that death cross, and we can get a bounce back up into the 30 to 32 area, I would be looking to be more inclined to short it. But down here, I would not look to short. I would look a better buyer on a retracement rally. All right, next is going to be gold. Gold does not like interest rate environment, and sure enough, I do think that gold will give us that pullback that we're looking for to that 50% retracement for that 12 to 1220 area, and then we would reevaluate it and see if we can bounce and create some sort of a base and take the base out. That's when I'll be the buyer. But I'm going to be looking probably a little bit more to short gold on a takeout on some of these key pivot low areas here. Okay. Next is the GLD. Just want to show you we're still looking for a target of 116, 118. That's the first target. Second target will be that 61.8% retracement. If we lose that, we have this thin zone here. Remember, be careful. We have a thin zone here. This is something that you guys need to pay attention to. If we lose this area, all right, this little area here, then I think that we're going to flush, and I do believe that's still in the cards. Next is going to be the GDX, and you can see that clearly here. Same thing. I'm looking for a flush lower, at least to the top of this 22 area. And if we flush again, thin zone area, right back down to the 61.8% retracement. Nothing really good here with the momentum indicators, RSI and MACD. Okay, let's get right to the spiders. Now, here is what I'm looking for. We have a gap fill area here that needs to be filled, which I believe will be filled between now and the end of the year. Okay, maybe even challenge a Brexit vote after this euphoria is all gone. All right, and then we have the gap area here that needs to be filled. We're right there. We're into the gap area. We're going to fill the gap today as we open. If we still hold true of the plus 15, 16, I think we're going to hold true here. So if we can get into this area, there's a lot of resistance up here, guys. I think we probably fill the gap, maybe challenge the highs, and then we'll see if we break out of the highs or we start to break down. Remember, guys, we had a fairly valued market here. There is no reason to be buying stocks at these areas. We're fully valued, so there's no discount to buying stocks. I just want to tell you, other than a big worldwide trading instrument, and that's what it looks like the world's doing. So be very careful here. Again, risk off can happen extremely fast here, but we're probably going to fill this gap. And let me just show you this chart here, just clean price and volume. Here's the gap area of 218, and we'll look to fill. And once we fill that gap, we want to pay attention, see if we start to roll over again, okay? And there's that other gap fill that I'm looking for. All right, guys, just bring it to your attention. That's the area that I'm looking for, and see if we get a rollover. And here's that 60-minute chart. Wanted to show you again these Pro Trader Premier. Had a bunch of subscribers come in. Hats off. I'm glad you guys come over. Very excited. Had some really good support resistance areas where the subscribers traded off of. And we have a webinar, by the way, I want to shout out next week. Okay, on Tuesday, November 16th. Come join us for free. Sign up on our website at tradingmarkettechnicals.com. Next is going to be the IWM. And IWM does very well between now and January, guys. So any pullback in the IWM, I would be a buyer in the IWM. I would not be a buyer in the spiders at the moment unless it's a quick day trade. But if you're looking to do something and hold this to the end of the year, this is looking very, very enticing, looking really constructive. We have a big, huge candle, a lot of volume. And again, we're looking for that gap fill area right up in here to that 124-ish, 124.5. And next and last is going to be the Qs. And you can see here, Qs a little bit dragging, but you can see here big volume. So we definitely had an accumulation day yesterday. So be careful out there, guys. Things change really, really fast. You have a couple of days of buying. Let's see what happens really next week. I don't suspect any selling coming into the markets until we get out of this week and we see what happens next week. All right. Have a great day, and we'll see you tomorrow.